Hello everyone, my name is 𝗵𝗽𝗆𝗆. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello everyone, my name is 𝗵𝗽𝗆𝗆 and I'm the founder of the 𝗫𝘆𝗺 Institute, and as you know, I'm bringing you the crème de la crème of the industry to talk about the different payment and banking industry hints and tips and insider information. And today's topic is really close to my heart because I'm advocating for this role for a while now. As you know, payments and banking affect every area of the organization, including the user experience, the technology, compliance, finance, data security, marketing, sales, strategy, risk, and so many other aspects. But I think we still miss a person who is overseeing all of these interdependencies and makes sense of all the payments and banking flows and makes the relevant decision around how does it affect the operation. So today's topic is the Chief Payment Officer, the CPayO, the role which doesn't exist but should. And actually, I'm very happy that today we have more and more opportunity to talk about this topic, because looks like companies start to realize that payment and banking and money movement and fintech decisions are no longer just purely financial decision. It cannot just be made by the finance department. And my invited guest is 𝗵𝗽𝗆𝗆, who is the actual original Chief Payment Officer, who actually worked in this role for many years, even before we started to talk about it. And I'm very excited to pick his brain, his opinion, his experience, and ask him to share all his insider information about this role. So thank you so much, 𝗵𝗽𝗆𝗆, to accept this invitation. Tell us a bit more about yourself and how did you actually become the Chief Payment Officer?
So thank you very much, first of all, for having me today. Delighted to speak on this topic, which is very close to my heart. Although I beg to differ in the sense that, that banking should be part of it, but we will cover that later on. But the Chief Payments Officer role is definitely something that should get more attention. And I'm very glad of the initiative that you have taken there and that I hopefully can support in some ways. So really, the very funny thing is that when I started working for BP, the big oil company, the energy company, in the early 90s, my second role, if you will, was around the introduction of card-based payments in the Dutch fuel station network. So the introduction of card terminals and debit cards, the domestic scheme at the time in the Netherlands, but also credit cards. And then, fast forward 30 something years later, I found myself in a similar role, but then for Europe. So from 2014-ish, I was responsible for the cards acceptance, payments acceptance initially in the fuel station network of BP in 7 countries, 14,000 terminals. But then surely, soon enough, came EV charging, came in-app payments, came web shops, from lubricants and from gas. So it really evolved from that. And I said to my boss back then, sorry, I have been fighting myself into another business line because payments are important and we should leverage the scale of the company. They don't have the knowledge. They don't know who the standard suppliers or the processes are. So I ended up, calling myself a chief payment officer with these sort of, quotation marks, because the role did not exist to that extent. But I thought, and it resonated with senior leadership in BP, although they didn't like, me using that title, to demonstrate how important this role is across business lines, across countries, to leverage the scale of a big merchant, to ensure that all those standard processes that come out of, SAP implementations and so on are actually leveraged and used. So this is how I came about that role. And then in 21, I took what they call a package. And in 22, I started working for Eurocommerce as payments advisor, from my own company.
What a journey. And I like that you actually created this title, even though it didn't exist.
Yeah.
And I think that we see it more and more today in mainly large organizations, realizing that this is indeed a standalone role with a special skill set and special responsibilities other than just put it on the finance. As usually we do, we collected some questions from the audience, but again, I just inserted my own questions in the conversation as well. So we are just going through these questions, giving a skeleton to the conversation. But before we jump in, I'm really, really curious. You said at the beginning that you do not want to add banking under it. My understanding is that anything which helps money move from one pocket to another, let it be bank, QR code, card payments, even digital asset, I put it on the payments and banking simply because the underlying banks are the ones who are making payments even possible. But I'm very curious about your opinion. What do you understand under banking, and why would you put it separate than payments and banking, and why the chief payment officer has no responsibility over these banking flows?
Well, I would see it as the payments officer and the payments team being in charge of the payments part of the customer journey. So it's the interaction of the merchants with its customers, be it consumers or business customers. And, of course, it is important, the process where the money coming, from those transactions actually lands in the bank account of the merchant. But I don't see it as much as the responsibility of the payments team to then, manage that. So once the money is there through contracts with acquirers or payment service providers or schemes, then it's more a treasury job, I would say, in, doing that in the right way, allocating it and using it for whatever, things they do with it. But of course, there are overlaps or interactions, if you will, if you're talking about transactions in a different currency, or if you're talking about cross-border transactions that sometimes happen. So for sure, I had relationships with the accounting team and with the banking team, the treasury team, but it did not fall under my remit so far, because I think you would have your hands full already in managing this payment part of the customer journey.
I love it that you actually make a clear separation between the treasury and the payment processes.
Yeah.
I think it's super interesting that how the role automatically, naturally evolved into two separate sections. But we still see a lot of companies where the chief payment officer is basically the CFO itself, and then it's responsible for the budgeting and all of those other reporting.
Well, that's just a great point that you're making there. You know, what I see time and again, and the same happened a little bit in BP, is where do you put this role in the organization? When I joined in this role, the last role that I held, payments was actually managed to a large extent by somebody from procurement. He was doing advocacy stuff, which was, very peculiar, and some colleagues in the IT function. So when I then took that role, I said, well, I own the business side of it. You can own the IT side and the procurement side. We work as a triangle, but I am ultimately responsible for the business side. I need to demonstrate to the business leadership of BP how our payments activities and our payment strategies support business strategies. And that is sometimes what I feel gets lost. I had another client who was working on replacing their payments landscape. And I started asking, what is your business strategy? Where do you want to operate? Which channels? And what do you want your customers to experience? And they said, that's not important. We just want a replacement of what we currently have. And I thought, okay, whatever you want. But to me, that would not be the right way to approach it.
That's so true. What do you think? What's the biggest challenge in this role?
I think the biggest challenge is to convince senior leadership. And this is what you hear, other speakers in the payments ecosystem say too. Once you have reached somebody, let's say senior SVP level, CFO, CEO level, CMO or CCO, so let's say C-level executives to understand how important payments are. It's, like the lifeblood of the company, because in the end, everybody loves to buy but hates to pay. So if you get payments wrong, then your sales will not happen, and therefore the profitability of the company. So, for senior leadership to understand that and to give it its appropriate place is, I think, crucial. But it's the hardest job. Historically, payments are seen as difficult, very technical, complex, has its own language, all true. But these days, I think there's much more going on as part that I mentioned earlier, improving the customer journey, but also the sort of the data and the financial insights you can gain out of it.
I think we see a lot of changes around the classical roles. The marketing is no longer just marketing. It's separated digital marketing and content creation. Sales is business development. HR become people. We haven't seen, for example, product 20 years ago now. Product is everything. So what I think is that this role naturally evolved into something out of the need. But I'm very curious, how do you see that? And since you already worked in this profession, in this role, before it was even a thing, how do you see, how is it going to be considered in the future as a general role, everyday role, when, business is more and more realizing that there is a need around this?
Well, I think with the, let's say, huge variety of payments options these days and the digitalization of the customer journey, many merchants, big and small, realize the importance of managing payments properly. So I see 3 or 4 things, developing from that. You see some bigger merchants who, have the money and the knowledge to do it, to set up their in-house payment service providers, big retailers. My former employer set up their in-house PSP. And this is a way to own more of the process themselves. But also, they could offer it to other companies, of course. The second move that you see is that the payments market, historically has evolved into a high concentration on the supply side and very little concentration, so huge fragmentation on the demand side, merchants and consumers. So you see efforts now by groups of merchants to form an alliance, form a cooperation for, call it collective buying or demand bundling or joint negotiation, whichever you want to call it. And in Eurocommerce, it's similar to groups of our members who are negotiating collectively with the Mars or Unilever or Procter & Gamble of this world, where the supply side is also quite concentrated versus, the demand side. And it's not just about this joint or collective buying, it's also around data sharing. Because what I also found, and which is a crucial part of this role, is to be able to have the data that underpin whatever you're trying to achieve. One of the things I noticed talking to the European institutions, you can make all kinds of statements, surcharging this, commercial card debt, development of account-to-account payments. But they will ask you, can you actually prove it? Do you have the underlying data? And this is hard. There's fractions of data here. The ECB does some numbers. There are ad hoc studies in countries, sometimes a little bit, over countries. And it makes it very hard to have like a neutral, objective, reliable, consistent, representative view. Even the ECB with all their investigative and analytical groups cannot picture or not create that picture in the right granularity. So I think this is a role where merchants can help. Merchants are sitting on a wealth of data. And if we then are able to pool our resources and bring together in an aggregated, anonymized, confidentiality assured way payments data, it will improve the quality of the conversation. And the third thing is, of course, this sort of professionalization of that role, Chief Payments Officer. And I'm glad to say that a few of the members of Eurocommerce actually have established such a role, even call it that way publicly. So I think this initiative that you're taking, Victoria, I wholeheartedly support, having an accreditation process where chief payment officer's role can be recognized will help greatly in the professionalization of this function.
I see more and more that when we are talking about fintech or neobanks or any kind of technology related to payments or banking or any kind of finances, it is more understood on the market. So when we are talking about the regulation, the fintech providers, the payment providers, the gateways, it more or less has a better defined scope and responsibilities. You're regulated, you've got a financial license, you do this, you have that. But when we are talking about the users of these services, it's an absolute blur. So indeed, I feel like that it's more of a supply than a demand kind of focused industry. And I don't really understand that how comes that every single point of the provider is regulated, but not a single sentence is regulated from the user side. We don't even have like a code of ethics. Yeah. I'm very curious. Why do you think it happens? And is it the time when we finally need to put things in perspective and fight for the users, not just regulate the providers?
I think so. So first of all, you have to remind yourself that payments is not the merchant's core business. The core business is selling a product or providing a service. And we do payments because, as I mentioned earlier, we want our customers to buy, but most importantly, also to pay for it. But I think more and more merchants realize that this is not something you do on a Saturday afternoon. You have to take this very more professional approach, even if you're an SME merchant. And so I would welcome, that professionalization, make it more professional by introducing things like certifications and code of conduct or ethics, because it'll help also those people on the supply side to have a more balanced conversation, on equal foot. Because payments is a separate language. I'll give you one very funny example. So in BP, we were talking with Visa on becoming a member, getting a Visa issuing license, and Visa was talking about payments volume. But being an oil company, we were thinking volume, you mean liters, but Visa meant the amount or the value of the transactions. It's a very simple example of how the language needs to be, matching with each other in order to have a meaningful conversation.
This is so true. I see exactly the same when I'm talking about the gateway and someone understands just the technical layer, someone else understands the payment orchestration, someone else understands the acquiring itself. So even on the basic expressions, we don't really have a common understanding that when I'm saying gateway, you have the exact same idea in your mind. What I think is that when we are setting up a company, there are obvious roles. For example, an accountant who has to do the financial reporting, who has to make sure that all the invoices are obviously handled and recorded. We have a legal team, which is making sure that we are not doing anything accidentally wrong. But when it comes to actually money, moving money or accepting funds, that somehow just falls on the shoulders of the finance and an accountant. And we don't really recognize that this evolved into such a specific, unique way of handling that part of the operation, meaning the person needs to understand the technological aspect, the risk, the financial licenses, the bit of treasury, as you mentioned, or at least working together with the treasury. Do you think that these payment problems will become that much that the chief payment officer or the head of payment is going to be automatically created by the company, or companies will only recognize that there is a problem when we start talking about it and they see that the competition is using these chief payment officers, and then the penny drops. They have it. They work much more efficient than me. Therefore, I also need to introduce this role.
I think the latter. So I think much more work needs to happen before it sort of, goes without saying that you need to have a chief payments officer in your merchant organization. Of course, smaller, medium merchants cannot afford a dedicated chief payment officer role, but they still should be, sort of familiar with some of the choices they are able to make. And maybe we can talk a little bit later on sort of, what we do from the trade association side on helping SMEs. But I think for the larger merchants, it is the realization that actually payments being the blood of the economic circulation, if you will, within the company, it has its, extensions into accounting and treasury, as we mentioned, but also into procurement, as I mentioned, or into IT, or into HR. Do you have the right people that understand this or can handle this, including the responsibility? In BP, I was responsible for 500 million transactions, and I think it was 20 billion euro in, related turnover. Those are massive volumes. Can you handle that? But even, maybe a very funny example, the extension into sustainability. How are digital payments increasing or decreasing the carbon footprint of a company? How can we make it more environmentally friendly or improve the safety of our staff? So there is many, let's say, directions that payments have a connection within the organization.
Exactly. And when we are seeing the big picture, how actually governments can attract more foreign investment by making accepting and sending money internationally easier, more accessible, how we can harmonize one country's regulations, financial regulations, to another country's financial regulations. So what I feel like that, again, going back to the point that when we are talking about the supplier, everything is regulated. But if we are even recognizing the role of the users and the responsibility of the users, then we can see how much it affects the larger scheme of things and benefits the larger society. Yeah. A company which is having healthy financial planning and good accounting and paying their taxes right is benefiting the whole society, because then it hires the people, gives back to the society, is is part of the larger picture.
Yeah.
In the same way, if a company understands that, oh, I shouldn't do that because my bank account is going to get closed, therefore it's not going to have any financial turbulence, therefore it's not going to fire everyone and cause some damage to that jurisdiction. This is also need to be recognized. How the regulators will, and obviously the society and the financial system will benefit more educated users as well, who understand the importance of these decisions and not just expect the accountant to figure it out.
Or the procurement manager or the IT manager. Yeah.
Exactly. Or the product person, right?
Yeah, true.
You think that there is also a bit of a lobby activity from the supplier perspective as well?
Sure.
Because if I am the large supplier company, the card schemes, the biggest payment provider, then I don't really want to be challenged. So it's good that you guys don't form an association and try to fight against me.
Yeah.
Do you also see that the providers like to work with the regulators on an exclusivity basis and not to be challenged?
Well, indeed, they have full-time lobbyists and many more than the merchant side or even the consumer side has. And let me remind you, for them, payments is a core business. For merchants and for consumers, it isn't. So we need to do it on top of everything else, like sustainability or taxation or competitiveness, digitalization, skills, and what have you. So it is a harder fight. I just want to make clear, this coalition that I mentioned earlier is not an association in itself. I say this because in the US, they actually went as far as to create an association, the Merchants Payments Coalition. It's a separate legal entity with their own, let's say, staff. In Europe, we've not gone that route. We might, but it's not on the table now.
Not yet, hopefully.
Perhaps.
Something and create something like this about it.
But this other group that I mentioned earlier around merchants, joining forces in bundling demand and sharing data. This is called the European Commerce and Innovation Council, ECIC. I always have to remember which C is C. That is an association in its own right. And Eurocommerce is working with it, supporting it with merchant engagement, with advocacy and publicity. But we are not part of the governance of that separate body, nor will we be part of, let's say, commercial interactions, because we are a lobby organization. So we need to be very clear on our role.
You think payment can be considered as industry agnostic because every company eventually needs to deal with payments, or shall we separate different payment problems, therefore standards, therefore scope for different industries? Because you mentioned, for example, the travel industry is a different kind of payment need, payment handling than, for example, as you mentioned, the coffees, as the manufacturing businesses or shipping, for example. So do you think we can still talk about payments as an industry agnostic general issue with general setup standards, or shall we really talk about payments specifically breaking down into certain industries?
No, I think it is more general. In the end, a cards payment, an account-to-account payment, a digital euro or a CBDC or a stablecoin, agentic commerce going forward, the same processes, the same concepts, the same definitions will apply. Of course, each industry have their own specialties. In BP, oil companies have fuel cards and they have loyalty cards. It's part of the payment process, but it has its own, let's say, sometimes company-specific requirements. If you talk about airline industry, they have their whole set of special things. They work with agents, or they work with online travel intermediaries. They work with merchants on record not being the one who collects the money. So it is there are all kinds of intricacies, complexities, business models that not apply to each industry, but the base concepts are all always the same. And I think that should be stressed. The industry-specific specialties are not the crucial bits.
everyone, my name is 𝗵𝗽𝗀𝗀𝗻 and I'm the founder of the 𝗫𝘆𝗺𝗲 Institute. Startups fail. And if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is 𝗵𝗽𝗻𝗁. Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm Marcia Klingenschmidt. Instant payments is transforming the way money moves all across the globe, across all the different industries.
Industry-specific specialties are not the crucial bits.
Once we define the scope, then we can add standards and best practices and obviously education to the role as well. But I still see that there is not that much of a focused education on the subject. Of course, you can get payment basic courses, card processing basics, but still there is no bare minimum education because the role is still not defined. In your opinion, first of all, why is it super important? I mean, obviously we decided that yes, it is very important, but what shall be that bare minimum education? What should be that bare minimum topic that a chief payment officer need to understand, at least in a conversational manner, to be able to ask help in case that there's a problem, or just recognize those interdependencies?
So I think it consists of a couple of things. So first of all, you need to learn the language. Like you're saying, the Payments 101, what is an acquirer, what is merchants of record, and all those, all that jargon. Like you would train for an airline pilot, you need to learn the language. I think second of all is understanding the role of payments in the business process. So I've shared with you as well this sort of, 6-step diagram, start with business requirements and how that translates in a payment strategy, how that relates into business requirements that lead into technical requirements that lead into the selection of providers or developing stuff yourself if you want, then running those things. But then you need to make sure you have reporting out of it so you can measure performance that then should feed back into this process of, is it actually working? Is it working in the way we intended it to do? So I think that sort of integration into the business process is very important. But I think to have that sort of extension and recognition and also setting a minimum qualifications kind of thing is very important. And purely from the merchant perspective, what you see today is that people end up in payment roles coming out of, banks or insurance companies, sometimes out of public affairs, sometimes out of IT. But the core establishment of a business-oriented payments professional is still a gap that I think should be filled, and there's a need to do that in a proper way.
And education is different than skills, because it's one thing what you learn and study and experience, but there are certain professions which need a very special skill set. For example, understand in general way, but don't go into details in one topic, for example, or see how things are interconnected. What do you think? What are the main skills which are missing in the industry today? And what are the good skills that the chief payment officer needs?
Well, I'm very glad that you raised it. Just the other day, one of our members said to me that what he likes is the way I can sort of talk at strategic level to senior folks on the business side, but also zoom into the details. So I think it's this ability of zooming in, zooming out, very important. I think another skill definitely is to always understand, but also be able to explain the business context. I sometimes introduce myself, let's bring some retail reality into the room. They have all these lofty ideas. I'll give you one example in a minute. And then I say, guys, come on, how will this work? And it's not just about digital payments, by the way. I just wanted to make that point. There is this conversation currently ongoing around the mandatory acceptance of cash. Now, one of the ideas that is part of that is they want to get rid of these no cash signs at storefronts. Instead, they want to have individual negotiations prior to the payments. I'm quoting this from the draft regulation. And I'm saying, guys, how will that work? 𝗬𝗍 or Victoria enters a store, maybe just browsing, maybe just looking. Do I approach them and say, in the event that you might consider buying something and paying, could we agree individually that you won't pay with cash? Or do I wait until 𝗬𝗍 or Victoria has stuff in the shopping basket? And I say, well, I see you have stuff in your shopping basket. Should you go to the checkout, can we agree individually prior to the payment that you won't pay with cash? Or do I wait until you end up at the checkout and say, oh, before I start scanning your items, can we agree individually prior to the payment that you won't pay with cash? This is not going to work. I mean, if you buy a car or you buy a refrigerator or you buy a luxury jewelry, you can individually negotiate. I get it. But in a high-speed environment, fast-moving consumer goods and stuff, forget it. So it's unrealistic. I just saw the latest compromise amendments for this piece of legislation to be, as discussed in the European Parliament, and it's still there. Complete lack of real-world thinking there. And this is the kind of things that merchants need to bring in the conversation. So back to your question around skills, bringing the practice, how does it actually work, what will work and what definitely won't work into the conversation.
When they say that common sense is not common at all, and this is the case here too, right? Yeah, let's talk about the change, because what I feel like that the fintech industry is changing, new licenses are coming up, new regulation is coming up, new providers, new digital assets, yes cash, no cash, everything is changing all the time. On top of that, merchants are also changing. So whatever deal you negotiated with your local payment provider 20 years ago, for sure it's outdated. There are new technologies, there are different prices, your volume is different, you enter new markets. How can someone keep up to date with everything when everything is changing all the time and still optimize what's the best for the company at that given moment?
It's very hard. Like I said, if you're big merchants, you might have staff dedicated to payments, but even they struggle to keep up with everything. I once made an overview of all the different pieces of European legislation, and I'm not talking about, domestic legislation affecting payments, and it's no less than 15. I think it's close to 20 different European, and it goes from the Accessibility Act, DORA, alternative fuels regulation, and so on and so on. So it's much wider than people initially think. And this is also aside from PCI, aside from scheme rules. So having the illusion as a merchant that you understand it all, or you need to read it all, or keep up with it, impossible. So naturally, you have to pick and choose. You go to conferences, you hear talks about stablecoins, you have a more or less rough idea of what they are, agentic commerce coming or not, or when or how, big questions. There is a bit of, hypes. A couple of years ago, it was the Internet of Things. Now we're talking about agentic commerce, maybe stablecoin. Of course, it is evolving, but it's very hard to keep up. Now, if you're a small merchant, forget it. So you're relying on your PSP, or mostly, a link between an acquiring contract and a terminal provider, rental kind of agreement. And what I have noticed, those few SMEs that I talk with, is that they don't know what they don't know. Do you know you have the option to have unblended fees. So you can see what kind of, cards are visiting your store. And, are they interregional cards? Are they commercial cards? Is it more credit? Is it more debit? Those are interesting things to know. The moment you choose for blended fees, which is your right, you have to understand the pros and the cons. But if you don't know, you don't know. The same way around surcharging. If you don't know you can surcharge or how surcharging should be done, you may lose out on an opportunity. The same about refunds. What are your rights and what are your obligations when customers require a refund or asking for it? So what we, I think, need to do more, and that's maybe something for both you and me, Victoria, is much more sort of, base education, not on the technicalities on how payments work, but also how do you use them in a business context together with what, the legislation allows you to do or not.
And I think people start to pay attention on this when they really feel it on their pocket. But I think our industry has the issue that there are a lot of fees which we take that, it has to happen, even without thinking about it, that this could be changed. So every time that I talk to a startup company, they take it automatic that, yes, I launch a product, I integrate whatever payment provider. Generally, the fees are 3%. This is what it is. It's a fact of life. And if they want to optimize something, they go to the nitty-gritty of incorporating a new company somewhere outside of the borders and talking about taxes and optimizing the marketing processes to the cent. But somehow payment is still outside of this conversation without even knowing that there could be a lot of money saved there and a lot of optimization. Because as you say, what you don't know, you don't know. And that's the important part. Yeah.
Sorry for jumping in here. So I think, you are picturing something that I have experienced myself. The product development team, they are developing a nice proposition, and the provider of that proposition can be a third party, says, well, I have a PSP or a payment solution integrated, so we can pilot it. And then that was one of those conversations where I fault myself into the conversation. I said, hang on. Who is this PSP? What are the conditions? I'd say, but it's only a pilot. And I said, I know, but those pilots have the very funny habit that once the pilot is successful, they become part of mainline business. And I don't want to be stuck with a non-standard solution or a non-standard supplier. We are making contracts with big acquirers, bundling our volume. And the moment I start eating away at that, I'm reducing my own negotiation position. Moreover, a non-standard supplier doesn't fit with the operational processes or the financial processes. So it's only creating a huge knock-on effect in internal costs after the fact. So I said, no. Invest more time now in your product development to ensure the standard terminal is integrated or the standard web shop payment platform, because then it will fit once the pilot is successful into the wider scheme of things. And the example I will give you is BP came up with a robot barista. So you could enter your latte macchiato, whatever order into a computer, and the robot would make your special coffee.
Nice.
I don't think the pilot has gone beyond pilot, but by the way, not related to the payments.
Yeah, I've seen it in very confusing data, or for example, the owners don't even know that there is a data point which is taking wrong. For example, going to a new market, you're integrating a whatever payment provider and start to test the product. But the approval rate of that payment provider could be as low as 60 or 70%. It doesn't mean that the product is not good. It doesn't mean that your marketing fails. It just people can't pay you. They are on your website, they type in their card details or using their wallet, and the payment just doesn't go through. So when it gets back to the management, as a result of the pilot, they say, it's not really successful. It was successful, but there was a huge obstacle that clients couldn't actually pay you. And that's what I see more often than not, that this question is even outside of the whole conversation when planning for the pilot project. And if they knew, then you wouldn't just need to fix the marketing, but also the payment process.
Now, I recognize completely what you were saying there, but I'll also give you one example of, the operations. So the proposition is running. And there may still be things that are under the bonnet that, if you're not aware of it, may affect your bottom line. The example I'll give you is that in one of the countries that BP operated in, we got a non-compliance fees because of the terminal not being contactless capable. However, the transactions in question were made with a contactless card. So the acquirer sent contactless transactions to the scheme, and the scheme said, these are coming from a contactless, non-compliant terminal. And we said, how in the world is that possible? It is a contactless transaction, for God's sakes. So we had to find out the hard way that somewhere in the transaction message, the terminal was not sending the right flag. I am contactless capable, even though the transaction was a contactless one. And therefore, it triggered those non-compliance fees. And it was hundreds of thousands of euros. So if you're not into the detail on the one side, but also if your PSP is not helping you to configure your infrastructure correctly, you can be out of money and your CEO will say, well, this is costing too much without you knowing why.
That's so true. And I think the payment provider is just a supplier. Their responsibility is not to fix your whole payment strategy and configure everything.
But they should. But they should. And I think you're bang on there. But why don't PSPs take more time to put themselves in the merchant's shoes, understand the business, and go through those kind of details? Only then you can develop a connection with your customer. But if you don't do that, some PSPs are leaning backwards, acquirers, and saying, well, we agreed interchange plus kind of billing. So I'll just pass on whatever interchange and scheme fees I get. We can negotiate around the acquiring margin, fine. But everything else, I just pass on. So they have no incentive whatsoever to fight for you to, is the correct interchange applied? Is the correct scheme fees applied? The example I just gave. So I think for those PSPs that manage to think like a merchant, have a much warmer and longer relationship, more profitable even, than those PSPs that simply say, well, I just pass on whatever I get charged.
Exactly. And I think money talks. And whatever pays the most amount to the shareholders, that's going to be voted. And nurturing a relationship with a client is very expensive. Yeah. So if you can automate things, and in the large scheme of things, you filter out all the problematic ones, if you figure it out, then you can process with me and just focus on the numbers. That's what I see a lot, mainly with the bigger acquirers, that you are just a number, not because they don't care, but they are not financially motivated to care. Maybe they don't even have a customer service team who is helping you. But that goes back to the original topic, which that's your responsibility as a merchant, as a business owner, to make sure that you have your payment and cash flow and banking strategy in place when you are configuring everything, when you are picking your partners according to your needs, your markets, your fees, your CRM system integration. But then if you don't know, what is the responsibility and where does the responsibility of the payment provider end, and when the responsibility for your team starts when it comes to payment.
And if you're a PSP only looking at your own bottom line, of course that'll work, at least for the short term. But in the long term, that customer will walk. If you're not being seen or heard, and you don't have the impression your supplier is sort of, sitting on the same side of the table trying to improve your business, there will be a moment where somebody else will, and then your customer walks. And the other thing is, of course, the moment you understand more of your merchant's business as a PSP, you are much better placed to offer additional services. Things like chargeback management is something that merchants hate. If you have a better way of doing that and helping the merchant with that, you can charge for it, and it's a win-win for both. Or, forex management, or I don't know. There's a couple of cash management. We were talking with acquirers whether they could pre-finance some of the payouts. Well, if you have that kind of options, the merchant might be even prepared to pay for it, and you have a more positive effect on your bottom line as a result.
What kind of strategies did you build when you were in the position, and what are the strategies that you would build today? The providers, the interdependencies, the red flags. What would be the main strategy that you would say that?
Well, I don't think there's one strategy that sort of works. I definitely would never go for one acquirer, because we have seen BP used to work with, I don't know what they do now, but in my role, we worked with two main ones, and of course, a few local ones for local payment methods. And you saw that at one point in time, the one was performing better, but then it deteriorated. And then the other was better and it deteriorated. So having the ability to play with two is important. However, switching between the two is not so easy. This whole hype, I would say again, around payments orchestration, which in theory should be able for merchants to, on a transaction basis almost, say, I send this one to the left and the other one to the right, even if they're coming from the same company or country, and even if they're coming with the same payment method. I have not seen many merchants do that. So I think it's more theory than practice. In the reality is, you have to ensure that you have the right setup in terms of merchants of record. You have to have the right contractual agreements in place, especially if you have franchisees or dealers. You need to have the right financial flows set up to do both. But definitely, I would caution against having one acquirer for the major part of your business. The other thing, I think, which is an essential strategy, as I mentioned earlier, is to get your internal alignment up to senior levels. I used to say the internal battles are harder to fight than the external negotiations. So invest time in making sure senior leadership understands what you're doing and why you're doing it. I think those things are key. And the third strategy would be around understanding enough of the detail to follow the conversation, but don't try to understand every, byte and bit. You will never be an expert in cards embossing, or you will never be an expert in terminal messaging. You will never be an expert in scheme rules, and you don't need to be. But you need to, globally understand what is in there and ask specialists where needed. So know where to ask would be the third strategy there.
Education is the key. We're always going back to that point.
Well, yeah. And as I mentioned, this zooming levels between high-level strategy and low-level detail.
And as a last question, where do we go as the industry? What do you think? Where should the industry focus next? What's happening with AI, with agentic payments? What's happening? Where are we going next? What's the future?
Well, first and foremost, of course, is strengthening still the role of merchants in payments. I think you're doing excellent work, but much more needs to happen in making sure we get a proper seat at the table or a hand at the steering wheel, whatever you want to call it. Be part of the conversation. You see it with many schemes that they don't allow merchants to become a member. Only you can become a member if you have a payments license. Not many merchants have, maybe 10 or so in Europe do, only the large ones. So I think much more better stakeholder management needs to happen. And that same applies on the European level, where I do my best in the Brussels bubble, but I'm sure more can be done. On agentic commerce, I think this is something that could be a real opportunity, but also a real concern. I recently was commenting on a draft paper written by a consultancy on, what AI agentic commerce can do in the retail environment with the kind of companies that are members at Eurocommerce. And it was interesting to see, for instance, that they said, well, it will increase sales. And I was wondering, increase sales, surely that's only sort of a time-limited effect, a sort of a first mover advantage. I can see how agentic commerce can reduce costs. So therefore, as a net, your margins will go up, or it will reduce, it will help with conversion. But to increase sales, I did not quite see that. And the other thing was, there was no reference in that, and I admit it was a draft, around the sort of flip side of agents doing the buying and the paying. There will be malicious agents. There will be unintended consequences that a consumer sends an agent to buy something and to pay for it, but not understanding how it works, and it might have unintended consequences. So this sort of, the more risk management side of agentic commerce, I think, is something that we will learn over time the hard way. But I think much more can be done in the very near future to already think about it. When I was in Berlin, I think somebody launched the concept of know your agent. Next to know your customer, know your business, know your agent. I really like that sort of, idea. But I think much more is needed there. And of course, as a payment specialist, a payments manager, you need to understand how an agentic transaction will be different than a transaction done by a person, potentially also leading to different payment options. And if the agent is going to pick a payment method, how do you ensure as a merchant you can direct that agent into the direction that works for you as a merchant as well? So it's a different kind of interaction and a different kind of skill. And there you go, the HR angle again, how you manage those agents coming into your ecosystem to buy and pay for goods and services. So I think it's definitely a trend to watch. The other one maybe on the horizon is stablecoin. I must admit, I don't immediately see how quickly that will affect retail payments. I see it in business to business and, business to government or government to business or between banks. So more in the wholesale area. I don't see stablecoin quickly entering into the retail payment space, but it could. I'm not ruling it out, but it won't be the most obvious use case, I would say. So I think those are the things that are, let's say, currently sort of on the horizon. One thing where I'm quite deeply involved is the digital euro, which some could say is a stablecoin issued by a public authority, although others may disagree and say, well, it has some social policy objectives that are not part of a stablecoin. But again, it is a digital representation of money. So there is similarity there. Very interesting to see how that will develop. This huge tension between the banks and PSPs not liking it, and also for resilience and strategic autonomy reasons. The merchants keen provided that XYZ, and the consumers mostly concerned around privacy and fraud protection. And the question is, what happens in the meantime? Will we see the likes of Visa, MasterCard getting stronger and stronger? Will we see finally some European account-to-account payments, becoming more covering a wider area? And this interoperability sounds nice, and from the consumer side, it is nice. But for the merchants, it's not bringing much. If you're operating in Spain and in Germany, you still need to integrate with each one of them in those countries. So I see interoperability as an intermediate step. So those are the sort of things on the radar, I think, for merchants to look for in the coming 5 years or so.
Super exciting. And I have got one more question for you before we wrap up. You think Chief Payment Officer could be my AI? Can I create my payment strategy through AI? Or do we still need the human element? And if yes, where?
Well, with all of AI, I still think you need humans to check whether AI is making sense or not. My biggest fear is, and you see it, I think, with younger people, that they ask AI a certain question and they take AI's answer for granted. So I think you still need to have the ability to check plausibility and correctness of whatever AI comes up with. That AI can be a strong tool, and you need to be trained on how to use the tool, no doubt. And I think people that are saying AI will be the better payments orchestrator in the future, it can determine on a per transaction basis where to process the payment, how to process the payment, which payment method to offer to the consumer. I can see AI doing stuff there. But from the way I explain it, you already hear, you need to tell AI how to do it. And I don't quickly see how AI could acquire that skill to do that without the right context and the right expertise. But so I don't think Chief Payments Officer will be superfluous anytime soon. This human oversight, this human check for are the outputs of AI actually correct is important, because this is about real money. This is about the bottom line of the merchant.
Exactly. And any AI is just as good as the underlying information. And there are still a lot of biased information, provider-supported educational articles, very misleading, not really standardized information out there. So I do see a lot of times when AI is making core mistakes. And if you don't know, you don't know, and at the end of the day, it's your money on the line.
Absolutely. So I'm also one of the editors. I'm a member of the editorial board of this journal for payments systems and strategies. And there was a submission for an article where I only at the end, saw the disclaimer that it was written by or written with the help of AI. And it had very basic mistakes, like that in Europe scheme fees are capped, where we all know that can't be true. So you have to know your stuff first before you use a tool like that.
Yes, true. And there are some really nice articles as well on our website from you. So I would like to encourage everyone just to follow the 𝗏𝗺𝗃 Institute website for the articles, for more free and very valuable content. Thank you so much. I think I can talk about this subject for years and years.
I think
more,
so.
But unfortunately, we have a limited time. But thank you so much for being here with us today. And I would like to encourage everyone that please reach out to us. We are very easy to find on LinkedIn, on social media. Just type in any of our names. Please do share your comments, your questions, your stories, your fears, your recommendations, because that's the only way that we can create an ethical and transparent industry where everybody is well informed. So thank you again. Thank you so much for being here with us today.
Thank you very much for having me. It was a real joy as ever to discuss with you. And I would encourage people who watch and listen to the webinar also to leave behind compliments, not just criticism and questions. Compliments are quite welcome too.
That's right. Be a friend. Thank you so much for everyone. Until the next time.
Thank you. Bye-bye.
Hey, welcome everybody. I'm Marcia Klingenschmidt. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.